Hi students, today we will discuss about the topic cost accounting. Before going to the term cost accounting, we have to make it clear that what is accounting. All of you know that accounting is the language of business. Through this language, through accounting, business communicates with the people who are interested to know about the business activities. A good system of accounting is essential for the success of a business. If our business not communicate with the persons outside the business and inside the business who are interested to know about the activities of the business, if we doesn't communicate that information to the persons outside the business, we cannot do our business successfully. There are mainly three branches of accounting: financial accounting, cost accounting, and management accounting. Financial accounting is actually the art of recording, classifying, and summarizing financial transactions and interpreting the results thereof. It is mainly concerned with the ascertainment of profit and the financial position. And second type of accounting is cost accounting. That is our topic. Cost accounting is actually the process of ascertainment of cost of production. It is concerned with cost ascertainment, then reporting of that cost to the management for decision making and cost control. Then our third type of accounting is management accounting. Management accounting, the name itself reveals that it is accounting for management. Management need so many informations for planning and decision making. In management accounting, we provide data for management for effective decision making and planning. Actually, we introduced this cost accounting because of the limitations of our financial accounting. Firstly, we used financial accounting. In our financial accounting, our intention is to ascertain the result of our business operation, how much amount of profit we earned, and what is the financial position of our business at the end of the accounting year. But that knowing of profit, that knowing of financial position doesn't satisfy all the needs of our business. Our financial accounting has so many limitations. First limitation is this: we know that the financial accounting, it is historical in nature. We record data, information after that cost already incurred. It has no meaning from the perspective of cost control. Then second limitation of financial accounting is this: this financial accounting gives information about the business as a whole. If we wanted to control our activities, we want to get the results or information of each department or each section of the organization. That information is not available in financial accounting. Then third limitation is this: it gives enough data for comparison between different products, process and operations. In most of the cases, we have to compare in between the cost of different products, process and operations. Enough information for that purpose is not provided by financial accounting. It is one of the limitations of financial accounting. Then another limitation is this: it doesn't give data about efficient and inefficient workers. From the perspective of business, we have to encourage our efficient workers and we have to compel our inefficient workers to work efficiently. Then fifth limitation of financial accounting is this: it doesn't provide sufficient cost data for setting selling price. we have to decide our selling price. Before setting the selling price, we have to know about our cost of production. Financial accounting gives some data, but that cost information, that information is not sufficient for setting a correct selling price. And then another limitation, it doesn't provide sufficient cost data to the management for decision making. These are the limitations of financial accounting. From these limitations of financial accounting, because of these limitations of this financial accounting, we think about cost accounting. Then when we enter to the introduction part of cost accounting, we have to familiar about certain terms. Cost accounting, one term is cost. Cost is, we know that cost simply means expense. Cost means the amount of expenditure, actual or notional, incurred on or attributable to a given thing, or to ascertain the cost of a given thing. It is a definition for our cost. That in that definition, cost is the amount of expenditure, actual or notional, incurred on or attributable to a given thing. Here we have two terms, actual or notional. Actual or notional. Actual means that amount actually goes out from our pocket. We spend something. But in case of notional, no amount actually gone out from our pocket. One example, if we run our business in our own shop, we have to pay no rent to outsiders. But when we calculate the cost, we have to consider that notional rent also. I will repeat the meaning of cost once again. The amount of expenditure, actual or notional, incurred on or attributable to a given thing, or to ascertain the cost of a given thing. Then another term, costing. Costing is the technique and process of ascertaining cost. It is one of the definitions given by ICM England. I will repeat it. Costing is the technique and process of ascertaining cost. Then another term, that term is cost accounting. Cost accounting is the process of accounting for cost, which begins with the recording of income and expenditure and ends with the preparation of statistical data. Cost accounting is the process of accounting for cost. It is the process of accounting for cost, which begins with the recording of income and expenditure. Cost accounting begins with the recording of income and expenditure and ends with the preparation of statistical data. These are the 3 points we have to note when we consider the term cost accounting. Then another term, cost accountancy. Cost accountancy is the application of costing, cost accounting methods and principles, techniques to the science, art and practice of cost control and the ascertainment of profitability. I will repeat it again. Cost accountancy is the application of costing, cost accounting methods and principles and techniques to the science, art and practice of cost control and the ascertainment of profitability. It includes the presentation of information for the purpose of managerial decision making. It includes the presentation of that information for the purpose of managerial decision making. I will repeat the term cost accountancy once again. Cost accountancy is the application of costing, then cost accounting methods, principles and techniques to the science, art and practice of cost control and the ascertainment of profitability. It includes the presentation of information therefrom for the purpose of managerial decision making. Then we have another term that also related to cost accounting. That term is cost control. Cost control is the guidance and regulation by executive action of the cost of operating an undertaking. I will repeat it. Cost control is the guidance and regulation by executive action of the cost of operating an undertaking. The cost of operating of an undertaking, if it is controlled by executives guidance regulation, then activities, we can call it as cost control. Then another term, the term is cost audit. Cost audit. Cost audit is the verification of correctness of cost accounts and a check on adherence of cost accounting plan. Repeat it. Cost audit is the verification of correctness of cost accounts and a check on the adherence of cost accounting plan. These are the terms. First one cost, then second costing, then third cost accounting, cost accountancy, then cost control, and the last cost audit. Then we have to discuss about what are the objectives of cost accounting. First objective of cost accounting is this: ascertainment of cost of production. First objective, ascertainment of cost of production. Second objective, determination of selling price, to determine selling price under different circumstances. Then third objective, to determine and control efficiency by setting the standards for material, labor and overheads. We have three elements when we calculate our cost: material, labor and overhead. Our third objective of cost accounting is to determine and control efficiency by setting standards for material, labor and overhead. Then our fourth objective of cost accounting is to determine the value of closing stock without any delay. In our cost accounting we have a system, we will study it later. Its name is perpetual inventory system. It is a system of continuous stock taking. By using that continuous stock taking, that perpetual inventory system in our organization, we can determine the value of closing stock at any time. Then another objective of cost accounting, to provide a basis for operating policy. To provide a basis for operating policy, we have to decide about whether we produce goods or to purchase it from outside, which will be better, how much quantity to be produced. All these things we have to decide. All these things are relating to our operating policy. Our cost accounting is one objective is to provide a basis for deciding our operating policy. Okay, thank you.